I have a dream, that's all I need. I'll make it happen with some work and belief. Know what I want, so I'll take it on. I've made mistakes, but mistakes make you strong.
Hi there, I'm JB. In this video, I'll run Disney through my valuation sheet and determine if it's time to put Disney back in the portfolio again. Now, let's look at my valuation sheet and the hard numbers. I won't be going through every metric individually. If you want an explanation of each one and how I use them, please see the long video where I explain how I use the individual metrics. So let's look at the intrinsic value. Book value per share is often referred to as the minimum value for a company per share, as it's the company's equity divided by the number of shares. Book value per share is right now $55.74. My EPS valuation is normally done using the current earnings per share, but here I decided to use the last 7 years' average EPS instead. Why? Well, I believe the current EPS is really not a good representation of the true value, and with the large swings in EPS, I would rather use an average than the lowest one. I know this is going to skew the result a little, but I really have a good feeling about that. As growth rate, I use the 5-year average, which is 11.47% for the first 5 years and 10% after that. Granted, Disney could grow faster, but when looking at 10-year, I think it's pretty spot on. My minimum rate of return is 10%. Here I could use the risk-free rate, but I don't mind a little risk, and I know that I can get at least 10% somewhere else, so 10 it is. For now, I set the margin of safety to 0, as I really believe these combined calculations already have the margin built in. The final PE I set at 23, which is the average over the last 23 years. So, in 2032, the share price would become around $212, and then we discount that back to today. That gives us a share price of $90.17. For my discounted cash flow valuation, I use the same growth rates and the same PE, giving us a share price of $65.20. My modified Graham number gives us a price of $116.64. My modified Peter Lynch fair value gives us a price of $60. And for good measure, I also use the Guru Focus fair value. Not the one they write on their webpage though, but the one I can calculate with their EPS valuation. Adding all these up and finding the average, we get a share price, or should we call it a medium share price, of $76.72 per share. At the making of this video, the share price was $94 per share. So, is a share price of around $77 a fair price? I would argue that's a bit at the low end. Well, Disney almost hit that price twice in October, and one could argue that any price below $80 is a fair price. Is Disney a buy? Well, not for me. There is not the growth potential I want for my portfolios. The dividends will resume in 2024, but I don't think they will be very high, and there's always a risk that Disney will suspend dividends again. If you like the company and the story, be my guest, but I don't invest in companies because of sentimentals, I invest because of fundamentals. And I don't see that here. So Disney is not a fit for any of my portfolios. But what do you think? Let me know in the comments. On that note, I will end the video. And remember, the best investment you can do is in you. The more you learn, the more you earn. Bye.
I have a dream, that's all I need. I'll make it happen with some work and belief. Know what I want, so I'll take it on. I've made mistakes, but mistakes make you strong. Let's break it down for a minute. I want the crown, I'm gon' get it. You hear me loud, man, I'm winning. Yeah, Charlie Sheen will be grinning. These ladies know that I'm sinning, and this is just the beginning. I'm closing in the ninth inning, there ain't no point in resisting.